Um, not feeling bad after a loss, like dealing with that. I wish I could kind of put it away easier. Move on to the next one. That's kind of one of my main hurdles. Um,
Yeah, and does that have to do with the
if that
size of
makes
the
sense.
loss, or is it just the fact that you had an opinion and the opinion got invalidated?
It's more the size of the loss. I mean, I'm okay with being wrong, but at the same time, sometimes I will make, I lost what 4% on a trade or 3.5% on a trade, and I was like, fuck, I should have exited at the obvious area, but instead I held on to it, and it reached my point of last resort where I had to get out, where I really should have uh, not held on to it as long as I did.
Yeah, so I used to think the same thing you did. I'm not saying you're wrong, but I'm saying I used to feel the same way you did. That it was the dollar amount lost that made me feel that way. Until I did a little experiment where I started
It
fading
was the
my.
percentage for me.
Yeah, right, exactly, yeah. But I'm saying what I did to test that was I did this sort of experiment where I started counter trading myself. So I would have a very established opinion, maybe an idea that I told other people, and other people patted me on the back for having a great idea, and so something my ego can latch onto, and
You know,
uh, and then I started counter trading it. And the really interesting thing that happened to me, and this is super super interesting. I'm still like curious about what happened during this experiment, but I found out that when I did that, and I was in a winning trade, contrary to my opinion, I was unhappy. I got mad, even though I was making
okay.
money. And that was a really, a light bulb went off for me in that moment, that I realized what I was upset, at least me personally, what I was upset about was my opinion being wrong. And then
Yeah, I don't know. I don't really get too much from that because I know I'm going to be wrong. I mean, I understand that. I didn't used to, but I guess now I do, and I don't get mad when I'm wrong. I get mad at myself for not putting in a tighter stop because it seems like after the fact I identify that that was the obvious area. If it breaks out, kind of like you were talking about that the smoke billowing earlier, kind of getting out of an area, like I'll see that and then still not quite convince myself to exit. Even though it's obvious I should. So
yeah, I think the effect
because I'm
is,
already down 2%. Not that I'm worried about being wrong, but I'm like, ah, shit, I'd like to recover some of this,
yeah, I think the
which is
effect is,
essentially revenge trading.
yeah, I think the effect is heightened the higher time frame you go, because you build like an opinion on the high time frames, and you have a lot more time to get invested in the opinion, right? And you may have months to get invested into it, um, which is a little bit different than creating an opinion on a 1 minute chart and having it, only having 20 minutes to identify with it. Yeah, man, I think just the way to frame losses in a healthy way is just it's just the cost of doing business. I mean,
Yeah,
if you were running any other business, right, you have expenses, and that's the way to, I think, to think about trading losses, right? It's just sometimes you just have business expenses.
yeah,
Um,
and that's okay. I mean,
do you have a risk model sort of built out, or are you how do you conceptualize the idea of risk? And uh,
it's mostly on a for each individual trade. It kind of depends on the situation. I'll go anywhere from 1 to 2%, sometimes three, uh, but only I'm trading the hourly time frames, so I kind of like to leave it a little bit of room to breathe. I'm trying to tighten that down though, because when I'm identifying areas, I'm still not super confident on what I'm always looking at. Like I'll see the area, but I don't know where to really hone in on to say if it gets here, you need to get out. And if I could identify that better, I think I could be more patient waiting for it to get closer to there. Let's say I want to take a short. maybe I'll wait for it to retrace up a little bit further before I actually enter that short and then give myself less risk. But at the same time, I'll maybe see the bottom of a range and try to get in there, even though I should have focused on getting in closer to the top of that range or that area of interest. So that's kind of what I'm working on.
Yeah. So when you're setting your stop losses, do you set a stop loss based on the risk? So say you have a 2% risk. Is that how you frame your stop loss, or is the stop loss based
Kind
on?
of. So what I'll do is I'll look for trades that when I see an area of failure that I want to be out by, I'll kind of do some napkin math to kind of make sure it's within my range. You know what I mean? I'm not gonna risk 5% on something just to see if it works. So the trade kind of has to fit my tolerance. If that does that make sense?
Yeah, yeah. I think the risk is if sometimes people will they'll set a stop loss based on a fixed risk percentage or some risk reward ratio that they're looking to pull from the market. And I think the risk is sometimes that number can be arbitrary, right? In the sense that it's not related to market
Yeah,
structure. It's just
exactly,
some level
exactly.
that
See,
has
when
no.
I was
Yeah,
doing indicator based trading, I would set a set 1 or 2%, and it seems like I got stopped out a lot. But I would be in the end right, even though I took a loss, and that frustrated the hell out of me. So yeah, exactly what you're just saying. I'm looking at more of market structure setups that fit my risk parameters.
yeah. No,
But I
that's
sent over a link to my FX book. If you ever feel like analyzing it or telling me maybe some obvious habits you see, feel free to point that out. But you don't have to look at it either. Just something I thought I'd send over.
yeah. Just post it in the Discord. I'll take a look at it. It.
Yeah, I actually sent it as a DM.
Oh, really? Okay, cool. Um,
Yeah,
you
just like
know,
just now. I just had it up. So
yeah. So
I mean, it's all public. I just haven't really shared it with too many people.
it's all good. Yeah, it might surprise you if I told you my risk profile for a trade. Like a fixed risk profile is a percentage of the total account equity. So typically I trade with like 0.15%, and that's not 1.5%. That's 0.15%.
Okay.
And I think that's probably a lot lower than pretty much everybody. At least everybody, most people you run into. I think uh, some professional traders might get closer to that, but um, yeah, I think that surprises people when I tell them that because you kind of. I think your first reaction is like, well, with my account size, you know, uh, an average person's account size, you're taking 0.15% risk. How are you going to make money, right? Um,
Yeah.
but the it's a situation where if you have an optimum risk profile, that's how you end up making money. And there's really no explanation for it. I mean, maybe you call it um, compound interest or whatever. There's that quote from Einstein where he referred to compound interest as what was it, the wonder of the world or something like that. But if you really if you really nail your risk profile down, you can make gains that don't make sense. They just don't make sense. Like your account is growing, and you're like, well, how's this happening? Like, I'm really not taking that much risk, but my account's growing pretty quickly. Um, it's one of those things where, like, if you another methodology I talk about. I haven't made a video on it yet, but it's basically I've talked with DJ about it. It's the Martingale principle.
Yeah. I'm familiar with that.
Yeah. So the Martingale principle is not a risk management principle. It's a statistical methodology, um, but it's a statistical methodology that gives you an edge. and statistically. And it's one of those things where like people ask me like, well, what is this thing? What is this methodology you're talking about? And I don't have a statistics background. I don't, I don't. I'm not a PhD in statistics. I'm sure there's a ton of guys who could explain it to you in detail. But the point is, I don't need to know it to obtain its benefit, right? On some level, I need to know how to apply it, but that's it, just on a surface level. I don't really need to understand it to benefit from it. So I guess what I'm trying to say is like if you're trying to build out a risk model or you're looking for some edge in the market, like that is the place where you're really, that is the holy grail. If there is a holy grail, it's that, you know, building out that model and having a statistical formula for how you trade.
Yeah, that's kind of what I'm working to build. But I work on a little thing here, a little thing here. Eventually, it's coming together. And I won't say I'm ready to do it full time or anything, but I'm much closer since joining this group than I was before I joined it. So I am exponentially happy.
Yeah, it's good, man. I mean, it's always good to, surround yourself with people who are as dedicated as you are. It's really hard to find people who are dedicated to trading, and it's kind of a little contrary, but or it seems like that wouldn't be true at first because there's a lot of people who are interested in trading, but once you get down into it, you're really interested in making money, but they're not as obsessed with it
Yeah.
as you may be or somebody else may be.
And I'll go through kind of spurts to where I just want to cram as much information, learn and learn and learn. But then like the last week or two, I was really burnt out on it. So I kind of, and I had some other stuff to do with my contracting work. So it kind of worked out to where I was busy with that and I kind of took a mental break. But now while I'm here, I'm ready to get back into it, pick up where I left off. So, and it's just because I was learning so much, watching all, both these programs, Lori and ICT, and I'm trying to take notes and practice these concepts and then try to practice them after learning them. It, and then you're wondering, well, am I doing it right? So,
Yeah,
it's just crazy how I can go from just, super into it to like, I need a break. So, I mean, I still want to do this, don't get me wrong, but I just recently experienced that where I took, well, you'll see, I kind of supplemented trading with that swing trade idea that I had going on in here. That way, I had something I was watching and monitoring, but I wasn't actively making a bunch of trades. So,
yeah,
if you
man.
do look at my FX book, you'll see the gap there. So,
Well, the other thing that I think is important is that um, when people they hear the concept of you need to be rigid and apply rigid rules to your trading, and they'll typically apply that to their entries, where that's really the area where you don't really need to be rigid. You can be very flexible in your entries and like where you add risk in the market. Um, it's really the rigidity is on the risk profile and your take profit regime, that type of area that um, is far more important than the entry itself. And that can be a confusing thing, but like, for me, like once you like nail down that risk profile, like it almost becomes like a religion, right? Like you some people, they pray every morning, right? Um, for me, it's that type of rigidity of like, you know, uh, having that belief instilled that this is what you do, and you don't, you're just not going to violate it. It's just not going to happen. Um, but I think in order to get to that place, you sort of have to understand why you're doing that on a very deep level. And I think you can. It's only possible to get to that area if you're able to think independently. And that's kind of confusing because it sounds like you're saying like, well, you don't need any more information, and in one sense that's true, in another sense it's not true, but So there might be a better way to phrase it, but I guess the time where trading people, or at least I've noticed people tend to really accelerate their development in trading is when they're at the point where everything they need and need to be successful, that or their observations of the market are enough, right? They don't need anybody to tell them that what they're doing is good, or to give them advice, or to um, promote them. Now, for me, I think it's helpful to have people, smart people I'm in contact with, to point out blind spots, because if you're operating narrowly, you might miss something. And if you have a bunch of really smart guys around you to point it out, then it can, it'll illuminate your blind spots.
Yeah,
But
more eyes on something is almost always better, no matter what. So yeah,
yeah,
that makes sense.
exactly. But then, like I wouldn't frame a trade idea based on somebody else's idea. That, you know, because essentially you can't take responsibility for somebody else's idea. It's
Yeah,
it's just not
yeah. When
possible.
I first started, I would listen to Crown in the morning, and I'd see like kind of what his thoughts were, and then I'd try to build a trade off of that, or if I agreed with it, or but yeah, I don't do that anymore. But yeah, so I totally get that.
Yeah, man, for sure. Let's see.